Good afternoon, ladies and gentlemen. Welcome back to my YouTube channel. And as always, thank you for taking out the time during your busy day to come and check out these videos. If you are new to the channel, a sub would be appreciated, as I do provide valuable educational content on a daily basis. And as always, if you enjoyed the video, please smash the like button for the YouTube algorithm. And as always, let me know down in the comments below exactly what it is that you would like for me to cover in my next video. So today I want to give you guys a updated weekly market breakdown, because why we seem to have been getting some skewed data as anticipated on Friday. So the question on everyone's lips is, what the f is happening to the US dollar? Well, today, ladies and gentlemen, that is exactly what we are going to discuss. Firstly, on Friday, NFP data comes out. The US economy creates 467,000 jobs. The wage inflation rises, yes. Wage inflation rises 0.7% last month. US dollar still down on the week. US rate futures raise odds of a 50% BPS hike in March. Now, we're going to go back to the fact that the US economy created 467,000 jobs. Now, you tell me, why the hell is the dollar not moving at all? Now, the market closed here on Friday. We expected this market to come out and move. It's Tuesday, and if you drop down on the lower time frame, you will see here that this market has done absolutely nothing for this entire week. Now the question is, what's going on? Why is the dollar not moving? Isn't fundamental data supposed to drive the long-term momentum of the market? What's happening? NFP normally comes out, but now we're not getting any of that. Well, ladies and gentlemen, I'm here to tell you one thing. So the market currently at the moment, they are waiting for the CPI data to come out, because they want to see what the current state of the US economy is in, due to how bad the inflation is in the country as well. Now, one thing to keep in mind also is that the Federal Reserve, which is mostly Powell, but the Federal Reserve is quite hawkish and preparing to deploy the monetary tightening tools throughout higher rates and balance sheet roll off, and this leaves scope for further gains in the US dollar as well. Now, listen to me properly. The Bank of England came out last week. They hiked interest rates by 0.25 basis points. And then the dollar comes and say, we are going to hike interest rates by 0.50 basis points there as well. Now, if you did not know, now you know that a hike in interest rates is very good for an economy. So that means that when the bank announces, when Powell comes out and he announces that we'd like to hike interest rates by 0.50 basis points, the dollar is going to increase in strength in the short term, but that's going to suit up and make things difficult for consumers as well. But in any case, they also came out and said that we expect the Feds to hike the interest rates at least 4 times in 2022 and then 3 times in 2023, and that means that the dollar is going to get stronger in the long term. But my question is, why is this not moving? Why have we not moved? Doesn't the NFP data mean nothing? Well, the answer again is quite simple. The market's waiting for that CPI data to come out, and I was sitting and I was thinking, but whoa, what's happening over here? Because everything was good, but nothing happened. So now we know that the market is waiting for that CPI data to come out as well. But in any case, we also saw that the Japanese yen was quite weak this week as well. And the bottom line basically is from here, ladies and gentlemen, is that the Fed is removing liquidity from the market, as of where the Bank of Japan, which is still adding liquidity, and it's likely to keep the US dollar elevated there as well. Now, one thing that we do need to keep in mind is that if there is one thing that makes everyone get excited, and that is investors, is to understand exactly what the current situation is in the market. Now, all good factors, let's move that aside. We have to remember one thing: everything that drove this economy, what drove the market, the Nasdaq 100 included. This is the one I'm speaking about in particular. Now, everything that drove this market, okay, all of it, all of this, okay, all of that you see over there, all of that drove the Nasdaq 100 throughout the pandemic, such as government financing of both household and corporate balance sheets, are set to slowly be withdrawn. And we know that Powell came in and said that we're going to start reducing the tapering process so we can start hiking interest rates by March. Also, following a wild January for global markets, as investors were grappling with a range of issues from a potential monetary policy tightening ahead of major central banks such as the US dollar reserve, ongoing geopolitical tension between the Russia and the West over Ukraine, to worry over inflation. So there is a lot currently going on that we need to that we need to keep ourselves mindful for. But now my question is, what happened here? Now, so what exactly happened here? Now, if the data for the NFP was positive on Friday, gold broke below this level of support, became resistance, the market tested it. The market did not go as we anticipated. Instead, the market had broken right above that level and is now testing that previous level in the market that it created. Now, to give you a bit of a fundamental data background, okay, gold price is on the back foot as we saw today. Okay, after witnessing back-to-back rallies last week, following the good unemployment data that we received from the US dollar last week. Now, my question is, if the US employment data was good, why is gold gone up? Well, any case. So the renewed uptick in the US Treasury yield is boosting the demand for the dollar across the board, weighing on the non-yield gold. Although looming Russian tensions over Ukraine and Sino-American tensions could help put a floor under the bright metal, looking ahead, the tension remains on the US inflation data due to release this week. That is our key contributing factor that we need to look out for. Now, my question is, gold has been rallying this week. The dollar index has been doing absolutely nothing this week. This market was stuck within this consolidation. Today is Tuesday. The CPI data comes out on Thursday. Is this market just going to consolidate for the next couple of days until Thursday and wait for the CPI data to come out? Is gold going to stop exactly where it is now, because gold is currently testing a very strong structure, and start the consolidation phase here? Could gold come down, start the consolidation phase over here? Nobody knows. The Nasdaq 100 as well. The Nasdaq 100 had been doing absolutely zero this week. The S&P 500 absolutely nothing this week. The Dow Jones absolutely, well, this was a breakdown that I did on for you guys on Sunday, and it is going as anticipated. But yeah, that was stuck within this range. This doesn't mean anything. This candle can potentially just close you at the bottom again. So now what I want to do is, so I want to give you guys a quick rundown. So obviously I'm not going to do the breakdown for the US 30. I'm also not going to go through too much S&P 500 because the price action remains the same. So I've done this breakdown for you guys on Sunday for all of these tech stocks, to say that we expected that move, and I also posted it on my Instagram as well. If you haven't checked it out, please go and have a look at that video, and don't forget to leave a follow and a like, subscribe to my all that stuff. And then I also anticipated this move. I said that we can wait for the pullback before the continuation as well. Funny thing is, we actually bought Nasdaq yesterday, and the stop loss was at 1930 right there. at 19 until exactly the stop loss was exactly where the market had pulled back to. And yeah, but in any case, there we go. So I'm going to leave that there. So I want to speak about the USD Cad. So I'm going to give you guys a good update very quickly. So we have to be very, very reactive. So now I'm going to give you guys two options, because why? We don't know what that CPI data holds for this week as well. So here on the monthly time frame, the market is not giving us any indication. The market is still stuck within this consolidation that it had broken below from this market activity as level of support, came back, tested it as resistance, and then we just had all this sideways movements from there as well. Now here from a weekly perspective, what do we see? From the weekly time frame, last week the market had closed above the strong level of resistance, support got broken, became resistance, market broke above that, tested all of that resistance there as well. And we also had this structure the market had created, which we can see the market is currently testing also. Now here on the daily time frame, what do we see? Now from a daily perspective, we see absolutely nothing, because this market has been doing nothing, ladies and gentlemen. The market is stuck within a consolidation phase, once again awaiting that CPI data to be released. So you know the drill. Well, we are going to wait for the market to break out of this consolidation phase, then on the retest, then we are going to start looking for buying or selling opportunities. Also, depending on what type of CPI data we get coming out this week. The Euro USD, I spoke about this pair. I did a breakdown yesterday also on my Instagram here, and I explained all of the reasons for why we can see this move to the downside take place as well. I think I did this breakdown for you guys on on Sunday as well. This move is still expected, so nothing had changed over here. We can expect this pullback from the Euro USD because the market is quite heavily overextended. Alternatively, once again, if we do get good CPI data, then option 2 would be, but for now, we can still ride these sells to the downside, and then hopefully by Thursday, the market would have been at this level. And then from here we can start making a decision based off what the CPI data tells us. Now, but the problem over here, gold. So the situation that we got now in gold, I'm just going to do the breakdown from the daily time frame because I do not want to drag out this video. So here we can firstly see that the market had broken this level of support, then came back to test it as resistance. Now resistance got broken. Now all of that resistance is now once again turned support. Now to give us an indication from where we can expect the market to pull back is simple. You take your Fibonacci from the low to the high, and you want to get a 0.38 pullback that lines up the best with structure. So from where gold is at the moment, we can definitely expect gold to pull back in the short term and then continue higher. Again, if this CPI data gives us a good indication, if the CPI data comes out, so we can definitely take this out to the downside, but if the CPI data comes out positive, then there's only one way for gold to go, which is to the downside there as well. The next, the DXY, I'm not going to waste my time with this thing because this thing is not doing anything, ladies and gentlemen. It's basically just watching us in the eyes. Now, I did a breakdown on this also for you guys on Sunday. This analysis still stands, and I said that we can expect the market to break above that level on the retest, then the continuation as well. Oh wait, I did this yesterday. Was this yesterday? Yeah, I did this breakdown yesterday. So we can still follow this breakdown. The reason for this is because the Japanese yen is getting very weak. So it's not because of a strong dollar, but because of a weak yen. So the Japanese yen is getting quite weak as there is talks of them extending the quarantine in Tokyo that they have been having. USD CHF has spoken about this as well. We've taken this trade already. We've taken this trade at this level over here. Okay, we've taken the trade. I seen it there in the signal group for you guys. For those of you that are in there, so I seen it in here. But same thing over here, because this is a safe haven currency. This market's also waiting for that CPI data to come out as well. The best thing to do is maybe want to get out and break even. Alternatively, you can hold on to the trade But one thing to keep into consideration, here from a 4-hour perspective, is that the market is still trading above this level of support that is now turned resistance. The market also created structure over here. If that CPI data comes out, we could put, if anything happens for the Swiss franc, and the Swiss franc does get weaker throughout this week before the CPI data gets released, we can expect some continuation to the upside. Negative CPI data will send the USD CHF to the downside. If you've not watched the video on how to trail stop losses, I would suggest you go and have a look at that, because if the market breaks below this level, you can just exit the trade on the retest. Now GBP USD also, as you can see over here, this market is also stuck within this consolidation phase on the 4-hour time frame, so the market had not moved as anticipated. Now the best way to approach the situation as we have it here, now I spoke about this market and I said that we could expect this market to pull back, then continue to the downside, or we could expect this market to take off. If you have not watched the breakdown for Sunday, then go and have a look at it. So this is the two options that I want to give you guys for the dollar index. But the main reason for this video was to give you guys an update of what is happening in the markets this week and why the markets has been trading quite sideways here as well. Now that's all from my side, and as always, cheers for ears.